Two of container accounts. We are just going to take a practical question. The practical question is there. For those of you who may want to write, it says Drawell and Company Limited sale of share in cans. The cans are purchased by the company at shilling 10,000 per can, but cash is written down at the standard book value of shilling 8,500 per can. Immediately it is purchased. For stock taking purposes, all cans are valued at shilling 8,500 per can, irrespective of whatever they are still in stock or in the hands of the customers. Cans are charged out to customers at shilling 16,000 per can, but the customer is credited with shilling 13,000 per can if the can is returned in good condition within 3 months of receipt. The following information relates to the year to start the 1st March 2022. Roman numeral 1, inventory of cans on hand at 1st April 2021, at premises 2,000 cans, with customers 6,000 cans. During the year, 4,000 cans were purchased, 50,000 cans were issued to customers, 46,000 cans were returned by the customers within the time limit, 3,000 cans were not returned within the time limit and were duly paid by the customers. Cans still in the hands of the customers as at 31st March had been invoiced since 21st February 2022. 2,000 cans kept in stock by Drawell and Company Limited had been damaged beyond repair. Shilling 2.1 million had been spent on repairing some severely damaged cans. 100 other damaged cans had been sold for shilling 300 per can. Required: repair the following accounts in the books of Drawell and Company Limited for the year ended 31st March 2022. Cans inventory account, cans suspense account, cans sent to customers account, cans profit and loss account. Let me hope you've seen the questions. So straight away, without wasting any time, this is the practical question and this is the solution. This is the practical question. So our question says Drawell Company Limited, the cans are purchased by the company at shilling 10,000. So we are having our purchase price of 10,000. We are having our 10,000 price of 8,500. The stock taking price still 8,500. The charge price and the return price is 1,000, 16,000 and 13,000 respectively. So if I don't want to watch the previous video, first go and watch it before you come to this, because you may get confused for nothing. First go and understand the first video before you connect to this one. And this is Langton Academic Solution. We offer all accounting problems, main accounting. So you can then subscribe on our YouTube channel, or if at all you are stuck, you contact 077 239 and 075 99 47 and 2. So if you are stuck, for more details, for more consultations in accounting and some other subjects. So of course this is the cans inventory account, the can suspense account, and the can sent to customers account. This is the can profit and loss, and we are having the cash or bank account, the repairs account. So it's always essential to first draw all these accounts before you fill in. First draw details, quantity, amount. Don't forget the debit and the credit. Details, quantity and amount. This is the can payment account, can suspense account, the can sent to customers account, and the can profit and loss. Like I've said, most of the details about these accounts was explained in the previous video. So from our question, inventory of cans on hand at 1st April 2021 at premises, this is the balance BD in the next year. So the balance BD is only written in the current inventory account. That we saw that the current inventory account, the container inventory account, we write that the balance BD. It means we had some cans in stock by the end of the year, and in the beginning of the next year it becomes our balance BD, and this is 17. This is the cans stock. We know very well that the cans inventory account, the container inventory account, or the container stock account is maintained at the stock taking price. And for this case, 2,000 times the stock taking price, and our stock taking price here is 8,500. That's how you come up with that 17. 2,000 times the stock taking price, which is this. Then Roman number 2, it says customers at premises. This transaction is written 3 times. First of all, you debit the cans inventory account, but still at stock taking price. 6,000 times 8,500, you end up getting 51 million. Then again you debit the customer's account. You debit the can send customer's account, which is but at the charged price. And the charged price, this is 6,000 times the charged price, which is 8. The charged price is 16,000. So 6,000 times 6,000, you end up getting 96,000. So, and of course, the effect of the effect of the customer sense is reflected in the suspense. So you debit the once you debit here, you credit the what? Once you debit here, you come and you credit the suspense. Still balance with the customers 6,000, but remember the suspense account is written down at the return price. So 6,000 times our return price, which is 13,000, you end up getting 78,000. Let me hope we've understood how we treat. The balance BD at customers is written 3 times. You debit the cans inventory account at the stock taking price, debit the customer send account but at the charging price, and you credit the suspense at what? At the return price. Then we are having, during the year, 4,000 cans were purchased. So when we purchase goods, we are meaning our stock is increasing. We purchased more cans. So and double enter whatever account increases is debited. For that case, purchases of 4,000, but you write at the purchase price. That's when the purchase price was 10,000, 4,000, and 10,000. That's how we get the 4,000. But remember, you either purchase this by either cash or bank. That's why you are required to open your cash or bank account and credit it, because you use this money to purchase the what? The goods. But remember, this account must be maintained at the stock taking price. It must be maintained at the stock taking price. But we are having 10,000, we purchased at 10,000. We purchased at 10,000. But our stock taking price, we purchased at 10,000, but our stock taking price is 8,500. But we must maintain it at the stock taking price. What do we do then? We must make sure that this 8,500 is the same as here. So what do? We are going to reduce by 1,500. That's the loss we make at the time we purchase the goods. Because immediately we purchase, you write them down at a certain value, which is 8,500, meaning there's a loss of 1,500. And the only way of inflicting that loss is you reduce it on the opposite. You reduce it by writing it on the opposite side. So for that case, you have in profit and loss times this 4,000 times the loss, which is 1,500, you end up getting 6 million. This 6 million is a loss. So it goes in your profit and loss on the debit side, because you know very well when the losses, expenses are debited. So that's how that is treated, that transaction is treated. Then we are having 50,000 cans were issued to customers. Once we issued out goods to cans to customers, we issued out cans to customers, meaning customers got more cans. If they got more cans, this is the 50,000 cans that were issued to customers. But remember, this the cans sent to customers' account, it must be maintained at the charged price. At the charged what? Charged price. If it must be maintained at the charged price, but this charged price, it has two values. The first one, it has two figures. It is broken down into two. It has the return price plus some amount, the profit in it. This profit of 3,000, when you get 13,000 plus 3,000, you get the return price. This profit is what we make at the time we sell the what? The containers. Because they give us this and return them this. When they return, we give them this amount of money. Meaning, we make a profit at the time we make a certain profit. So, and that's why you write the 15 times the 13,000. You end up getting this. And this is the profit and loss. The 3,000 times the 15. You end up getting that. So this one is reflected in the suspense. You complete double entry. Suspense. You come in the suspense. You get it there. You come in the 50. You get the what? The suspense. But at the what? At the return price, which is 50,000 times 13,000 return price, and the profit and loss you must complete double entry, which is 150,000 times the 150,000. Here it was debited, so you go your profit and loss. You do what? You credit. So that's how we treat that transaction. Then the next 3,000 cans were not returned within the time limit. So these cans were not returned. No, sorry, I've skipped one. Roman numeral 4. 4,600 cans, 46,000 cans were not returned by the customer. Were returned. So meaning when they were returned by the customers, the first 6,000, meaning our suspense. And I told you that the suspense is dated whenever customers return the what? The goods. And because it increases when the customers want the goods and decreases when the customers, when we issue goods to the customers. So here they return the goods, which is this, times the return price, which is this amount. So it has to be reflected on the debit of the what? Of the credit of the customer sent account. So it is 46,000 times the return price, but it's already, this one is written down as the charging price, but I told you the charging price has two prices, the 13,000 and the 3,000. It has the return price and the profit. So this is the return price and this is the profit. The profit, you complete its double entry in the profit and loss account. You debit. So that's how that one is also done. And we are having 3,000 cans. Now these cans were not returned within the time limit. If at all they were not returned, meaning our suspense, meaning these cans were not returned. The customers deliberately failed to return these cans. If at all they didn't return them, meaning we assume these customers are taking them, which is the 3,500 times the return price, which is 13,000. Our return price is 13,000. This is the return price. 13,000 is the return price. Now the return price is 13,000. What does this mean? This 13,000, for this case, it's going to equal to the 8,500, which is the, remember these customers, they didn't return our cans. If they didn't return, what does it mean? it means we have to purchase these cans. It means we have to purchase. So, and this is the price. First of all, it means they are not going to receive their money because we are not going to give back this amount. But again, we are going to use this money that we are supposed to give them to purchase. After purchasing, we shall remain with some profit of, I think, 4,500. So, this one 3,000 divided into 2, which is this and this. The 3,000 times 8,500. This is the money we are going to use to purchase the what? The cans, which is here. Maybe we shall purchase these cans that we lost. And remember, in this account, we are running on a stock taking price. Afterwards, we are going to, this is the profit and loss. We made some profit of 4,500, which is here, and must be reflected in the profit and loss account, which is, I think, which is here. So that's how that account is also treated. Then 2,000 cans kept in stock had been damaged beyond repair. Once cans are damaged, it simply means we made a loss. These cans were damaged. So it reduces the cans inventory account, profit and loss, which is 2,000 times the stock taking price. You end up getting this. Because they are damaged, we shall never recover them. So meaning you go to profit and loss to complete double entry, you put it there on the debit side, the profit and loss. Then shilling 21,000 had been spent on repairing some slightly damaged cans. Meaning we spent the amount of money in repairing the slightly damaged cans. Meaning we will move the money, this money in form of either cash or bank, meaning the cash or bank is going to reduce. Our cash account is going to do what? Reduce, which is this one. So, on repairs, that's why we are debiting the repairs and we are breaking the what? The repairs. Then, and lastly, one other damaged cans had been sold for shilling 3,000 per can. First of all, let this transaction into 100 other damaged cans, meaning these cans were damaged. If they are damaged, so what? If I thought they were damaged, what does it mean? They were 100 and they were damaged. If these 100 cans were damaged, what do we do? Meaning we made a loss. That's why I are seeing 100 and 85 times the stock taking price of 8,500, we end up getting this figure. Because we are damaged, we made a loss. It is reflected in the profit and loss here. Then, but however, even though they are damaged, we sold them at 300 per can. They are 100, meaning we got some cash out of them after selling them, which is 300 times the 10,000, 3,000 times the 100, we end up getting this cash, and this cash is in the form of profit and loss. We got some profits, so you got the profit and loss account, and we complete that double entry. So, for that case, our question is that the next thing is balancing of these accounts. How do you balance off? Whenever balancing off container accounts, you always begin with the suspense. You begin with the suspense, but you begin with the quantities of the suspense. This is the quantity of the suspense. So what do you do? If this is the quantity of the suspense, you are going to add the debit and the credit. And I think for this case, this credit was bigger than the debit. It was 56,000. So that's why we go to 56 and 56. Then when 56 minus this, you end up getting the balance carried out at 7,000. You multiply them. This is the current suspense account. It's written down at the what? At the return price. It's written down at the return price. You multiply it times the return price. Times the what? The return price, which is 1,300, 7,000 times 1,300, you end up getting 91,000. So after you add, you will see if the values will be the same. Add this and this. If they are the same, just know the number has balanced. If they are not the same, check for an error somewhere. So, however, this balance carried down. Again, you carry it on the current inventory account on the opposite side. It's on the debit side, so you carry it here. On the opposite side, you multiply it times the stock taking price, because this is the inventory the current inventory account is maintained at the stock taking price. Time is this. So you end up getting this amount of money. Now after getting the balance sheet from the suspense, again you re-add. You only add the what? The quantities. So when you add a discounted, you have 1,000 to 12,000. So this was bigger, this 12,000. So after you find the balance BD and that balance scale down, another balance scale down here, it was 17,000, no 1,700 times the stock taking price, which is this. So the stock taking price. After you again add to see if they are the same. For this case of the same customers, you balance the same way. You begin with the totals. You compare the credit and the debit, which one is bigger. And for this case, this side was bigger. After finding the balance scale down, after finding the balance scale down, what do? You add the totals to see if they are equal. These other accounts, you balance them in the normal way. You balance them in the normal way, the usual balancing. So that's all about. That's a practical example of container accounts. So don't forget to subscribe Langton Academic Solutions for more details. For more, in case there's a new video that we posted, you will be able to see it. And don't forget to contact us in case of any inquiries. Otherwise, thanks for watching. May God bless you.